Hi, good evening, everyone. Wow, you guys are all doing this. This is the type of spirit that I like. Everybody, greeting, good evening to everyone. That's fantastic. Now, tonight, the MAO will be shorter than normal because I only prepared two key items, but I think they are very, very important. All right, so important a point that, right, if you have been with me on MAO for a long while, you may find a little bit like a deja vu thingy. Yes, when I was preparing this evening PowerPoint, right, I basically had this feeling, a deja vu feeling, and I know that that time itself, when we talk about that, the immediate reaction was people like, are you sure? Then after that, about a week later, nothing really happened. But the second week, right, that is where the stock market began to come off quite badly. Okay, so that's the reason why I said it's a deja vu effect here itself. Okay, so this evening will be delving towards that direction. All right, so time check is 9:33 p.m. That is where the time I start this session. All right, so before we start this thing, relax, disclaimer not yet. Okay, what is this? Want to see wow Bonner? What was it supposed to be? Sorry, not I don't understand that particular word. Okay, so anyway, guys, before we start this evening, right? Same thing, guys. Okay, I need you to know that okay that this evening the sharing itself, right, is all my personal opinion. All right, so don't get too excited over that. Now, before we start this evening, let me just show you some numbers first. Okay. All right, let's go. Okay, can you all see my IG, this IG weekend markets? Can you see that? Yes, right. Okay. Now at the moment now you can see right here. Okay, you can see that the weekend Wall Street is showing about 41.4 point down. It is very near to my number 2915151. I repeat, the number that I was mentioning back then itself, right? Remember on daily MAO 29151. Okay, this number is a very critical support level that the Dow Jones cannot break. Now, this in the evening, I saw that it was down to 80 at one stage. Then after that, the market rebounded, obviously. So I believe that this number will be a widely tested figure. And if the market really goes below this, I believe the market will swiftly hit 29,000 pretty fast. Okay, so traders watch out for that, 29,151. Okay. Now, of course, on the reason why of that, because today I'm focusing on this. Okay, 2 days ago, the US, they basically had 204,000 cases, okay, with 1,998 people pass on. Then yesterday was 172,000 people and about 1,004. So while 3,500 people passed on, Donald Trump was golfing. Like, oh my goodness, what type of president can he be? So what the G20 is ongoing, the virtual G20 is going on. He basically went for golf, and just now he just arrived to give his speech. I don't know lah. He's really a very unique guy. All I can say that. All right, now the latest number is not updated yet. Let me just refresh for you. The latest number now, we are seeing this. Okay, hold on. Okay, now it's still not updated yet. Okay, not updated yet. It's about 12.4 million. Okay, all right. So I will let my numbers tonight share with you, but definitely I'm focusing on this coronavirus. Okay, so everybody, can you see this PowerPoint slides right now? Can you see? Yes? Okay. All right. So tonight, in fact, 22nd November 2020, we're going to talk about the indicators. I mean, we're talking about broad-based indicators. Today is very broad-based. And I use all the data from all the top financial companies. So these data are really from the best of the best. All right. But of course, to believe it or not, I leave it to you to decide. Okay. The indicators are flashing, but the market kept going up. We know that. And the reason is very unique because if you can remember back in this early January, when I did the MAO, I had almost the same identical title. Do you remember that? I almost had the same identical title whereby I talk about the indicators are also flashing, alarming, right, or blinking, but the market kept going up. Then after that, the market basically went higher And by February, that's where the market literally fell off the cliff. All right, now today, I realized that the thing is about the same. Okay, so let's just start this evening by asking you guys, how many of you are actually bullish? How many of you are bearish? Please key in the Zoom group chat right now. Thank you very much. Let me see it. What is the numbers here? You can see live here now. Bearish, bullish, bullish, bearish. Okay, this is big. I see more bear than bull at the moment. Okay, at the moment it's more bearish. Bullish still January 2021. Bullish for short term. All right. So tonight we have a little bit more bear than bull. A little bit more bear than bull. Okay, but never mind. Let's see what happened. All right. So before we start this evening itself, right? Let me show you the topic for today. Coronavirus continue to spread and getting worse. That is the main thing. And because of this itself, right, it leads to my personal take is that the global and US economic indicators are flashing, but stock market kept rising. Deja vu, all right? Deja vu means something like it repeats again. All right, so this is my sharing for today. It's only two topics, right? But I think quite a lot to share. Okay, so before we start this evening, as usual, I would like you to do disclaimer as usual. I need you guys to give me all your disclaimer. Please key the disclaimer right into the Zoom group chat so that you know I can be protected. Now, the thing is this, it's always very difficult for me to share stuff with you guys. And of course, if things goes well, everybody's happy. But if things doesn't go that well, people get upset and then a lot of things going on. Now, like recently gold has been sideways all the way. You all know gold is going sideways. And of course, our PSV system doesn't have any buy indicator right now. Now, if you have bought gold, actually you'll be caught badly by gold recently. And if you have done that, you're losing money. So the thing is that I think if the indicators say don't buy, just don't buy, stay out. So there's nothing to be upset about if you don't make money at the moment. But now the opportunity is right knocking on the door. And if you don't make money when the opportunity knocks right, then seriously, you are missing the point. So being upset and lament, I can understand. But if you are doing it right and hurting one another, I think it's pretty silly. All right, so I think this message is passed on very clearly to some of the people right here, some of my students here. I hope that you understand this and let us make money together, okay? All right, we leave no man behind unless you choose to go, okay? All right, the thing is this, why flashing signal? Now today I'm going to stop covering what happened last week because I realized that last week, whatever happened is all right, it's not that important. What's happened going forward, okay? More to forward forecast. So how many of you believe that market moves in pattern? If you believe, key 1. If you don't believe, key 2. If you believe, key 1. You don't believe, key 2. You don't believe that, okay? All right, Eugene, Leroy, don't believe, okay? All right, nothing wrong about that. I'm just reading the numbers out of the thing, okay? Wow, okay. So, yes, you. All right, okay. 2 because of the boys. Okay, all right. 1 plus 2, apa ni? All right, okay. The thing is this, okay? Now, tonight, my sharing, more important is that you must take your own decision because it actually cuts both ways, which means that the patterns tells me that, okay, there's going to be a potential deja vu effect, right, coming on. But the thing is, the last time when I talked about this, right, before the market came off, it took about 2 weeks. Then the thing happened. Then, of course, back then, it was because of coronavirus. It was because of coronavirus that the market came off. So the thing is that now coronavirus is ongoing. So then what will be the next one that will create this potential sell-off? That's why I also don't know, right? I can't tell you. I won't know about this. So I'll tell you that, right, we could be 2 weeks to 3 weeks ahead of the market before the big movement comes down. All right, 2 to 3 weeks. So if I call for sell today, and I say about 2 to 3 weeks time, some of you may be getting into the market and say, hey, oh, Cal says sell, okay, let's sell. Then what happened? The next 2 3 weeks, the market keep on going up, then you blame me for that. So I'll let you understand this. Tonight sharing itself is a bit of deja vu effect. Once again, this is my 5th time talking about this. All right, you have to plan your trade carefully. You have to wait for the right opportunity to arrive, and the signal must give to you the pattern. Okay, all clear? Huh? Very important. That's why I stay on quite long on this particular topic here. So the thing is this, because the Federal Reserve, oh, sorry, there's a mistake here. Give me a short moment. I think there is a error here. Wait a minute. Okay, wait. Hold on. I think that my slides, I didn't turn the slides up. Give me a moment. Okay, somewhere I went wrong. This I should be showing you this one first. Okay, hold on. Mistake. Go on, guys. If not, it won't flow. Okay, sorry. Let's do it again. Okay, so from here, okay, y'all can see my slides. Yes, right. Okay, I can see my slides. Okay, continue. Okay, so apology on that. Right, I'm talking about this itself, right? It's about the coronavirus spreading. Now, the thing is, you can see the coronavirus repercussion. Okay, you can see that now this is the 7-day moving average. And you realize that now, right, the numbers is way, way above the 7-day moving average. Can you see that? That means you compare to the current moving average and the current level now, right, it's moving far away. Now, previously, it was still sticking to it. Then there was a little bit movement here. Then recently, it's all right. You can see it is moving way above the 7-day moving average. Okay, and the deaths also definitely moving up. This is not very healthy. And of course, if this is going to continue, what we're going to see is that now you can see this. Okay, we have all the news telling you that even our this Hong Kong Singapore bubble, travel bubble, right, is put on hold. And now again, this thing is happening. No bacon, no toilet paper, panic buying, American clears shelves again. Now, of course, you think about this, when you're 180,000 people falling sick every single day, there will be a sudden depletion of workers across the board, in all sectors especially. So if people are not going to work or worried, okay, and there's no vaccine, now there is a vaccine ongoing, but it's still currently for FDA to actually come out. And even the fastest production is about 1 to 2 months time. Let me ask you a very important next question. If we're talking about 180,000 people falling sick every day, we need to wait for 60 days for the vaccine to be ready. Now do the maths, my friend. 60 days times 180,000 people. How many people will be sick by the time the vaccine is out? Then I ask you next question, that would you be able to dare enough to go out to actually get the vaccine? And do you think that you dare to stay up with the vaccine in your body and you're going to try again? And you look at what happened in some of the medical company, they say that you need to take 2 times before it actually helps. So my friends, I believe this is going to be a big problem. Now, I'm not basically a bearish person or basically want to tell you bad stuff, but this is something we know. All right, we know. And the country that is getting the worst hit is America. And America is the type of country whereby once the market sneezes, all right, the whole world catch a cold. And if I say they get a fever, the whole world will become very sick. All right. Yes, the big boys know and everybody know about it itself. Okay, herd immunity. All right, I also hope that I also hope that it happens, okay? So Hong Kong has reported 43 new cases. That's the reason why it is tightening. But the question is this, right? If everybody is now doing this herd immunity, or we try to curb the import, right, then why is it still ongoing? Now, Singapore and Hong Kong in terms of size are about the same. So somewhere or rather, there's some slack. So I really hope that now Singapore, like 13 days consecutively, no problem. I hope we maintain that. I know our government doing a great job, but really we have to be very careful. So that's why you can see from Channel News Asia, right, they are telling you in Hong Kong, they urge the public to stay at home as much as possible, go lesser, and avoid dining out and unnecessary social activities. So this is ongoing, and this is the current number in Hong Kong. All right, now this is the one that I want to show you the US, and as of start from March, you can see that the numbers are really mounting up very fast in a very parabolic way. Okay, this is a parabolic movement, all right? Now, of course, people say that, well, it may go off soon. I say at least 2 months. We know that the vaccine, no matter how fast it is, it takes about 2 months from now. So the question is now winter period is coming in. The number is parabolic. Seriously, what do you expect to see later on? So that's my point here, guys. I'm not trying to scare anybody, but we have to be what they call clear with that. Now, that's how I saw, right? You say, right, the big boys know it. Everybody know it, all right. But the problem is everybody knows it, but the market is not realizing it. At least the market is going up. But after tonight, my sharing, right, you see from a very different angle already, okay? So the thing is that for US, they're top 12 million, we know, and this doctor says that, this expert, sorry, it's faster and broader than ever, okay? This is done by CNN Health, all right? Then the thing is this is the one, hospital beds running out, okay? All right, so what is happening is that, think about it, 180,000 people falling sick every moment itself, every day. What do you expect to see? So you can see very sad case when nurse had to watch her own father fighting COVID and all this thing. All right. Now, of course, you may say that this is CNN. It could be a propaganda, try to hit Donald Trump. Now, seriously, Donald Trump, in my books itself, unless really miracle happens, he's out already, put it this way. When a judge had already tell him that, sorry, they control his case out with no merit, it's pretty clear. So let me ask you one very crazy question, if you don't mind me saying this. If I am an outgoing president, and theoretically, if I believe that my election was because of some rigging, okay, and I have 2 more months to go, and I will pass the baton to someone called Biden, which I don't like from day one, okay? What do you think I will do from now till then? I mean, will I put this thing, no matter what happened, no matter how I go out now, you will blame me anyway. So what do you think I will do before I go out on the 20th of January 2021? Think about this, if you are him. All right, this is my thought. That's why when he went to play golf, right, at one moment it's like, it's typical him. But at the other moment, I think that, what can you do next? Don't do lah. My point, chill already, correct. Why must I do anything else? You don't, anyway, I'm going to lose it anyway. So the thing is this, okay? See? So the thing is that with that itself, right, that's why I believe that this coronavirus will cause this thing to happen. So because of that, Federal Reserve is the one that's pumping the money. The market keep on going up is because the Federal Reserve kept on pumping money. How much you pump again? They just pump. Look at it. They just pump again. They just pump another 200 billion, all right, in a span of 1 month. All right, 200 billion in a span of 1 month, okay? All right, if you keep on pumping money like this, is that right? The stock market cannot go down, you will keep on going up. So some people tell me this, Cal, then as a case, we don't need to worry, you keep on buying stocks. Yes, you are absolutely right. If this is going to keep on going, buying stock makes a lot of sense. But the question is, while we are all buying, who's selling? Now, every transaction is always a buyer and a seller, like it or not itself, okay? So the question is, if everybody is buying, right, then may I ask who is the opposite camp? Or is it because you buy, then you sell to another retailer, then the retailer buy again from you at a higher price again? Think about this. Which retailer has the power to book the price higher? That is whereby I have my doubt. So you can see that funds are also popping in. Now, 4.5 billion inflow in a week. All right, this is really more than that itself. This is by the EPFR Global. All right, it's the largest weekly haul by equity funds, right, collecting this data. Now, seriously, when I did this PowerPoint today, when I saw this EPFR, right, then straight away I ran through my previous MEO and I realized that that was the same thing. Back in January, the EPFR has the highest number of people, how many funds coming in. Then again, I was being challenged on this. Cal, you see, the funds are coming in and called to sell. I say, no, I'm trying to say that the funds from people, the retail funds are going in. Now, US stock funds are retail collected funds then coming in. And then, of course, they're shoring into the market. Now, it's because of this thing of Pfizer and this all this company, right? This company doing the vaccine. So they believe that the vaccine will definitely save the world. Hence, therefore, people believe in that, pump in a lot of money, and these funds get activated and they move in. Now, of course, if you are a money manager and you tell people that, hey, the vaccines is ready, the economy will recover, it makes a lot of sense to sell this product. But the question is this: when? When will it happen? And by the time if the market cave in, right? Basically, these funds who take these funds they don't make money until until the market goes up, right? But the thing is that for these commissions that they generate, it's a lot of money. So which means that if you collect 5 billion from people, just 1% com itself, right? It's a lot of money, and Christmas coming soon. So I'm actually quite thinking that right, they are just trying to get a quick bite over here. But nonetheless, itself, right? FYI, I repeat, this is the largest weekly haul by equity funds, so which means that there's a lot of money in the market. So Federal Reserve are pumping in, the funds are buying in, then of course to stay long makes a lot of sense, right? So please make sure you remember that. Make sure you remember that. Okay. So you can see that this is the entire last 12 years numbers. Okay, I'll let you take a look here right now. Okay. So the thing is this: the last time we saw something was this is here in 2018. In 2018, we have the same thing happen. Now, if your memory didn't fail you or you are an avid trader, you will know what happened in 2018 in the first part of the year. Anyone can tell me what happened in 2018? Anyone can tell me? In 2018 itself, right, the first 3 months, right? Anyone can remember what happened to the stock market? Anyone? You can type into there now. Okay, that is the amount of funds that came in. Okay, all right. No one? The market was up. Yeah, the market was up. The market was up. It was a big run. Okay, big run, right? Okay, right. So that's why I say you must know your pattern very well. But watch this, my friends. Watch this, huh? Okay, wait, oops. All right, so you can see that this is the from EPFR. This is really from there, and you can see that the amount is tremendous, biggest ever flow. And you look at the stock market, brilliant, right? Brilliant. You see. Now, basically, this wave here, this wave up is this guy here. Okay, this is where the wave came in. Okay, the money came in, and the market rallied. Now, this is where the money came in again. The market rallied. So you got a point, right? So this money that come into the market really, really helps a lot. Okay, it really brings stock market higher. Okay, undeniable. All right. So of course, you say, well, if we know this detail, that'll be good. Well, it was mentioned before, but the thing is this. The thing is this. Watch heavily. All right. The U.S. Okay, U.S. mortgage debt is also climbing at the same time, and it's as much as $10 trillion. Now, because of the low interest rate, people start to buy houses. This makes a lot of sense. All right, you can see Singapore, right? Even the HDBs are now getting more and more buyers in Singapore. The land, I mean, so-called, there are more people buying properties because of the low interest rate. But the problem comes here. If I have, because of low interest rate, I buy property. Good, nothing wrong. But the thing is this. The thing is this, okay? If the economy really slump and people have to lose their job, even a low interest rate environment itself, right, will cause a problem for people. So the thing is this: the home buyers are leveraging at a near constant right level because they think it's low rate, just keep on buying. So the thing is, it keep on going higher, and this is actually something to watch out for, because if this market breaks, it's going to be very bad. And later on, towards the end of this PowerPoint presentation, right, you see one company that I'll mention later on, and there's alarming bell ringing already. I'll talk about that later. So US is one, but global, global is even scarier. Global debt top 272 trillion in Q3 2020. Now, seriously, I mean, of course you say, but this is global, what to do with me? Right, because everybody's printing money, everybody's doing something. But the same thing is that the virus is also hitting the whole world, right? 180 countries all at the same time having this problem. So the question is, how long can this continue, right? That is a question that you must understand. And this one came from IMF, national source, okay? So that's the reason why you can see when this guy, CEO Masayoshi Son, says that he's holding cash to prepare for the worst case scenario. Now, seriously, last time when he speaks, people trust a little bit. But after the recent attack on the NASDAQ counters and he did all the funny stuff, I mean, his credit really went down quite a fair bit. All right, so the thing is, can we believe what he says? Now, this is very surprising because we all know that, right? Recently, someone bought as much as $4 billion worth of tax shares call options again. And of course, they suspect that it was him. So it'll be very interesting if he was him that buy it, then why he call for sell? So unless he play a quick one, he tell the world to sell, but he went to buy. You got my point? So today, this sharing itself is very contradictory. It's both side views. I purposely put both side view for you to think about it, okay? I'm not putting my one view here. So he says that he's holding cash. Why? Now, the reason is because he says that if big if the world shut down in a second wave of coronavirus. Now, this word if, okay, is something that I use many times, and I also repeated what he said, if there is a second wave. But the question is, aren't we seeing the second wave right now? We are seeing the second wave right now. So basically, he was supposed to sell $4 billion of asset. But after that, after thinking through, he decided to go out for 80 billion, meaning he just liquidated as much as he can. So he sold, but the market, they have no reaction. The market go higher. So it doesn't mean big boy sells, the market had to go down. No, the big boy can sell all he wants, but the market can still go up because the funds are coming in. Okay? So for Masayoshi Son itself, right, he says that about in next 2-3 months, any disaster could happen. And we're just preparing for the worst case scenario. Now, both sides coin again. If let's say 2 or 3 months later, the vaccine is out and it's all is good, And he may turn his words and say, okay, no problem anymore. Let's buy into the market. And the market go much higher. So the Dow can go as high as 32,000. A level that I keep on saying this, if the market happens to be buoyant, the Dow can go to 32,000 rather easily. Okay, because so many people now is actually not in cash. Okay, all right. So the thing is, you can see that, right? He wanted to sell some of these companies, okay? And he didn't say what disaster can happen, but he mentioned that it looks something similar, like how the Lehman 2008 collapse, okay, can happen. Now, when he quoted this itself, now many people say that, oh, it's because of the coronavirus. But I was questioning myself, why would you want to use Lehman Brothers? Is it because that it's just the nearest collection of memory, or is it because that he knows something's going to happen to one particular company? Now, seriously, on today MAO Live, let me tell you this, right? Based on my personal research, I cannot confirm, but I do suspect some companies by December, okay, may have problem because of what they have been doing the last few months, okay? So I cannot confirm it, so I won't release the name, but I'm definitely basically watching these two companies. And if this company really comes in and really tell the whole world that they have this money issue, right, the repercussion will be serious. Okay, that's my point here. So when I read this itself, right, I suddenly have this deja vu feeling all the way. All right, and of course, the way he says is this: of course, medical vaccine is coming, but who knows in the next 2-3 months? I mean, for him to say all these things is really pretty sad. All right, I mean, this is not encouraging, but the thing is that why would you want to do that? Then I checked the SoftBank Group shares. Apparently, right, it looks good, no? Even though, right, he did a lot of funny things, but the share price looks quite very stable. But of course, you know, Nikkei is at all-time last 10 years high, lah. So that one, of course, is a bit of mitigating effect here. So the thing is, do you believe what this Masayoshi Son says, or you think that he's just bullshitting and want to create a market to go down so you can buy more? I let you decide, okay? Victor, maybe software be Lehman. Oh, I don't know. I will not quote that. Okay. So, excuse me. So what I saw was a Russell 3000, Russell top 3000 shares, the PE ratio, okay? Now, the PE ratio is always debatable. Some people say that PE ratio is high because the market is buoyant, sentiment is strong, people buying relentlessly. I agree. But PE ratio means that it's price over earning, meaning the price now is way above earning. So where are we right now? Year 1999, that was where the NASDAQ crisis, okay, the tech bubble burst. That was where it went. There's about 29 back then, okay, the index. Then, of course, in 2009, that was even lower. That was Lehman crisis, right? That was around here. That's about 25. The problem is Russell 3000 today, while the coronavirus is ongoing, with the historical depressed earning, we are 31. I mean, huh? I mean, tell me, my friends, I don't understand this. So what I did, let me do a quick one right here. Okay, is that I bring this one up. Okay, let's take a look again here. You can see right now, where is Russia? Russia has about 2 million people sick. All right, of course, minus recovered about 500,000. Okay, but it's number 5 in the world. Okay, so my point is this: with people falling sick with vaccine not out. If you remember this, Russia was the first country that actually says that they have the vaccine. Remember, they were the first one. They claimed, but after that, no sound, no picture already. Remember that? So my point: do you believe in patterns? So, dear all, this is really one-way traffic, and only when you pump in a lot of money, then you can have something like this. You know, why God makes any sense here? So, is this called a parabolic? Yes, indeed. And always, it doesn't turn out good. So, guys, now the sentiment. Now, this is from Citigroup, not from me. Citigroup panic euphoria model. We are now back up again. Okay, back to where? We are back to this last year, April time. Okay, whereby things are all good. Okay, now below this one, below minus 0.0 is a panic button. In top is euphoria. So we are now again back to the euphoria level again. So that means that the buoyancy is definitely very strong. That's why you see the PE ratio is at very high level. Okay, so everything looks good for the buyers. Okay, everything looks good for the buying. And this thing, short sellers are not there anymore. Apparently, it's not right since 2019. after the market came down so badly, but the short interest of market cap has went down quite a fair bit, meaning people are not interested to short anymore. So in short, everyone you know is all on the buy side. I repeat, almost everyone you know is on the buy side. The question again, I say, if everybody is buying, who the hell is selling? That is my point here, guys. Now we all know that the big boys, we talk about big boys, we talk about this, all the banks and financial institutions. But the real big boys are the people that own these banks. That's my point. The real big boys. Somewhere we will know who are they, but I believe they exist because somewhere or other, companies are companies. You need to run by human, right? Then the thing is this: I don't believe that after so many years, right? Sorry, I don't believe so many years. Jeff Bezos is the first billionaire with $200 billion. Come on now. I mean, we talk about all the Saudi kings and all these things. They are worth more than that, but they're never in the Forbes magazine. So my question is this: there are much richer than these people on the Forbes magazine, definitely for sure. Don't tell me the last 10 over years, no one have more than $200 billion. You must be joking, my friends. Okay, so I'll leave it down there to let you decide, but definitely it's it's siding the bull market. It's siding the bull. And of course now, that is where my point comes in. This is from Thomson Reuters, okay, not from me. Okay, take a look. Okay, take a look. When the number goes up, that means the insider transaction ratio is high. So when it's high, means what? When it high itself, right, means a lot of people are selling. A lot of people are selling their stocks. So the last time we saw this was in this period of time. We know that, right? Because that was whereby people will sell. So you look at it now, we are now having more people selling than not. So while the bull market is coming in, the funds are there, Federal Reserve are there, the sentiment are good, but the problem is the insiders are selling. The insiders are selling. This is really not nice, because if you look at it again, right, when the insiders are selling, right, what happened? The market actually came off, and we are now right smack at the top level and even higher than last 2 years. So guys, you think about it. I'll let you think about it. Okay. So from the November survey of the FMS investor optimism, we're definitely at a very high level. You can see it's climbing up. So when the coronavirus is climbing up in numbers, the optimism is also climbing at the same time. This is by Bank of America, okay, Global Fund Manager Survey. So again, this survey, can we trust this survey? Well, let's put it this way. Every time when the survey hits a high of 55 area to 60 area, interestingly, the stock market will come down. Okay, I repeat, you must look at the chart from two different views. One view is freaking bullish. It's so bullish that that's why the stock market keep on going higher. On the next note itself, right, when the market hit about 50 level, you can see that on average 50 level, okay, the market will U-turn later. U-turn later, L-A-T-E-R, later, okay? So which means that, right, we have to watch out, okay? All right, so you have another 2-3 weeks potentially to move further higher. I will know that. But the thing is this, right, you have to play cool, all right? Eugene, I'm not too sure it's a CEO selling, but the thing is this one itself is from there. I couldn't go deeper than this. I believe that it should be like the management are selling. Okay, so you may ask, then where should we invest? Well, if I'm a fund manager, I will tell you that to invest in emerging markets because why? This is where the money is. You can see this on this side here, long tech shares, long tech growth, are good stuff. Okay, long the FANG stock, are all great stuff. Okay, then the thing that you shouldn't be in will be the treasuries and Bitcoin. All right, you shouldn't be. So I look at it from another angle now. Okay, if this market is full of people now, and based on what I'm seeing right now, the market in this point, this market will be the first to get hit. Then the funds will move out to somewhere. The funds will move out to somewhere. You understand my point? You understand? So if these funds on this market is no longer the favorite, then the funds must go to somewhere. And obviously, well, this is my personal pick. This is my personal pick. Okay, this is two on my personal pick. So the thing is that I believe this. I put in record today. Once this market get hit, right, everyone here will get hit. Everyone. Then after it got hit already, some of them will be the next favorite for time being until the things settle down. So we look at it from this point of view. All right, if the market get hit because of fear, because of the virus, things like that, the funds will move out to somewhere to get some money to be made. Funds will never stay lingo. They will basically, you rotate the funds and make sure you get as much as possible. So I suspect that, right, these few markets here will jump up crazily after the initial knee-jerk selling. I repeat, after the knee-jerk selling, all right, there will be one of them, I don't know who, there will be a sudden surge of buying like craziness. All right, there will be something like this. You got my point? If you're still with me, key number 1, please. Right, how many people? Whoa, we have 206 people today. Oh, okay, higher than my expected. All right, wow, okay. More people than my preview. I should do more MAO then. No, enough already. All right. Okay, so the thing is this, right? So you can see that these are the whereby the funds are not there. So you might want to take a look at those. It's how I see as investment. So you can see right here now, this is where you must ask yourself this. Do you trust the analyst or the past pattern? Now, apparently, it's already, this is from Bank of America Global Fund Manager Survey. All right, when the growth expectation is at high level, all right, after that, people buy shares, they buy stuff. Now, how many of you can remember back in March 2002? Do you remember what happened in there? In year 2002, do you remember what happened? Can you tell me? All right. Now, back then in January to March, the optimism was at a record level back then. Then after that, the market collapsed. Now the question is, we are now at a level higher than March 2002. And what are we now? We are also at record level, all right? So everybody take a look at this chart. Remember, it's March 2002, and today, November 2020. Take a look, guys. Now, this is what happened in 2002, whereby the Dow was at about 10,400, okay? Now, this is a daily chart, okay? So from then on itself, right, this is where it was. The Dow went up for another 10 days. So that's the same thing what I say about this 2 to 3 weeks, okay? The optimism continued to push the market higher. But then after that, when the market broke the trend, the market literally collapsed to this point here itself. And that figure was 7464. So we do a simple math here. If the back then was 10,500, okay, and the level here is about, make it simple, 7,500, okay, make it a round off number. So the difference is about 3,000 points. So 3,000 points is about 30%. So if we're talking about today's number, 29,000, right, 200, multiplied by 70%. Can anyone tell me what will the number be? All right, what will this number be? Wow, you guys are so fast. I haven't finished my question, your key number already. You all know me so well. Okay, yes. Today? Yeah, no, 24. Okay, all right, my daughter. All right, 20,440, okay? Now, this number, you write down somewhere first, because later on, towards the end of this presentation, right, there's a chart for you. And when I see this, I freak out already. I tell you that. So this number, you better, take picture as what you usually do, whatever. 20440, okay? Now, of course, I'm not saying that you repeat, but the problem is, in terms of timing, it seems to be down there. You know why? Because this is March time period, right? So this is what happened, and the market move on, right? And the movement back then was also the same movement, okay? Right, so that is the thing here. So this is the yield curve. Now the yield curve, look at it, the yield curve. Interesting, it's very interesting. The yield curve now, back then, in Lehman Brothers, when it hit 60, that was where the break happened. Then after that, when you do the taper tantrum, it happened again. Then election in 2016, it happened again. And now 2020, it happened again. Now, the market's not talking about this. The market has kept quiet. All right, that's why I tell you this. For my MAO, I put in a lot of work onto this. And you can see that, right, it's a deja vu repeat. So what happened after that? We saw this, we saw this, we saw this, we might see this, okay? So would this be a deja vu once again? I'll let you decide. But I can tell you one thing, guys, I will take my risk here. Because look at it, overall, right, we are at a high level. So if I were to take a short position, let's say I do a put option, all right, I sell a put, I may expose myself to a very bad deal, right? The market may go even higher and kill more of my put. But on the flip side itself, right, if I'm right, the out of money, right, will turn pretty nicely for me. So you got my point here in my direction. So it's like what you do lottery, you bet small to get big if it happens. To me now, right, this trade, this point makes a lot of sense. But again, I will repeat this, it may be 2-3 weeks later, then the ultimate peak arrive. Because the optimism now, the buying now, the funds now are at the highest level, all right? Okay, you must be very careful with this. All right. This Ni Seng, right? Yeah, 2-3 weeks. I've been repeating myself. 2-3 weeks, we will see something like this. All right, 2-3 weeks later. Okay, from today, 2-3 weeks. All right, hopefully I'll be wrong. Hopefully, so y'all can make more money from the bull side. Okay, I know a lot of people are bullish. All right, so this is whereby I spotted this. Okay, I spotted this. This is the fund manager cash level. Now, when fund manager hold cash, right, it's because they got fear. But if they're not holding cash, meaning they are fully vested. All right, so you can see obviously now, very interesting. Okay, we see that the stock market is at the high level, and the cash is at the lowest. All right, okay, now it's the same level back in like 2020. Okay, same level right compared to here. So two sides of the coin. Some people say that, right? That means they are so optimistic. The boys are so confident. They are buying. So when are we buying? Fair. This statement makes a lot of sense. If the boys are buying, aren't you buying? That makes a lot of sense. But like I say from all the charts earlier itself, right? We are all at the optimism high. And the thing is that if patterns repeats, then aren't you at the right place? Because we have seen this whenever these boys or these fund managers are at the most optimistic time, and the funds are the lowest level in terms of cash holding, the market come off. So if you believe that this is going to happen, then this is what is happening right now. Leroy Yo, does it make sense to short, say 1 week later from now? Well, I say I'm not here to predict. That's why what I did is that every day, every morning, I do my MAO to give you levels for you to do and decide on your own. Okay, remember, our system itself is not here to predict. We can't predict anything. Nothing can be predicted. It's all about probability, and you do risk control. Right? If you're unhappy with the system of ours, you can move on to find another system as long as it helps you. End of the day is this, guys. Weekend MAO is a macro view of what's happening around the world and helping people to understand things better. That's why whenever I do my weekend MAO, right, I realize that people, my camp, have problem in adjusting to it because they say, hey, Cal say this, Cal say that. Do note, macro view and daily trading is different. Daily can still buy as long as the signal call for buy. Macro view is that prepare. You understand my point? I'll give you a simple scenario. If I'm telling you now in 2 weeks' time there'll be a heavy thunderstorm coming in and probably you cannot go out of your house. Probably. Okay? There's so heavy rain and there'll be a hailstone coming down. But tomorrow, the sun is up. The sun is out and it's so shiny. It's bright and good. Because of Cal tell you that, would you not go out to buy your food? No, right? You still have to go out. But the only thing is this, probably you bring one umbrella with you just in case he comes. But if he doesn't come, then what happened? So what if he doesn't come for 5-6 days? Then after that, one day you say, I don't care about it anymore. I go out and the thing came in, then how? So that's my point here. So, all right. Andrew, I've been buying out money puts on S&P every week, like lottery tickets. Honestly, Andrew, I totally agree with your strategy. Right? As long as you can afford to take this risk, doing out of money put itself makes a lot of sense, in my opinion. All right. Yeah, in my opinion, it makes a lot of sense. Okay. So you guys go and think about it, what to do. My job is to share. Okay. Right. The thing is this. That is the reason why last week I talked about smart money index. Now, smart money index, people ask me, can you go in detail on that? Well, there's very limited stuff. Obviously, they can't tell you a lot of things. But again, this indicator is like that, okay? What they do is they basically take the majority of the traders, all right, all the emotional news drive reaction, and then they combine it together with the buy order and short covering order. So in short, they basically take the buy sell orders to popularize it with the indicator. Okay, it's an intraday price pattern. So this smart money index itself, right, is available in some of the platforms. Okay. Now, how accurate is it itself? It depends on the money flow. But what I'm trying to explain to you is this one here. Take a look, everybody. Now, this is what is happening. The money flow is the blue one. The market is the one in orange. Now, what you are seeing is observed. Okay, take a look. Now, all along itself, right, you can see when the smart money is buying, the stock market goes up. When the smart money is getting out, the stock market crash off. Okay, we can understand this, makes a lot of sense. But the problem is since September, okay, since September, we have a very interesting decoupling, which means that the smart money is getting out like crazy, but the stock market is going up. Then the question is this, then what is happening here? I told you before, all right, smart money and funds are different thing altogether. Funds are collected money and then they had to invest because they want a commission. Okay, that's why the 500, the trillion, the billions of dollars they collected. But on the flip side itself, with this Federal Reserve pumping in 200 billion on a monthly schedule, so of course this gives people to get out. You see, if I'm a fund, if I own a lot of shares in the market, if I own, I'm a multi-billionaire, and I want to get out. If I throw my portfolio today, the market will know. But if I know that I have sell, the Federal Reserve is buying, the mutual funds are buying, then I can get out. So you see the difference there itself. The smart money are getting out while the market keep on going higher. So the question comes here. I repeat, Kel, if let's say you are wrong, okay, the smart money reverse and come in as they should. Wow, then what happened to that market? I told you before, S&P will hit 4,000, definitely for sure, which means that, right, the 32,000 for Dow will definitely happen if they reverse course. If they reverse course. But the question is, what if they are actually right? So if they're actually right, what happened? My God, look at it. Down the smart money index is even lower than the back in year in 2020 March time. They are selling out faster than that. The question is this. Now, back then in COVID-19 March time, you sell, I understand. But why are you selling now? Why are you selling it now with the market at the high? Right, with the vaccine ongoing now, then why are you selling? So that's why bring me back to last two MAO, why the Pfizer CEO is selling, why Jeff Bezos is selling. It doesn't make sense. Somewhere in this whole equation doesn't make sense. And that's why I say, guys, be very careful, all right? I know a lot of trainers are calling for buy. I understand that, all right? I would love to tell you that, do buy. But the patterns tell me that I just be more vigilant, that's all, okay? So this is the one that really hit me very hard. You know why? Because if you remember my last MAO a few months ago, all right, during the January time, the MAO, I did show you this indicator, right? This is the greed versus fear gauge indicator. All right, the last time we saw this, 2 weeks later, the market sell off. Remember that? Anyone remember this? When I show you this, the greed indicator was in a green territory, right? In January last year. After that, the market 2 weeks later came off. If you remember that, key 1 and key 1, 2. 1, 2 into the group chat. 1 and 2 into the group chat. If you remember this, if you don't remember this, that's fine. Okay? All right, don't key or say I was doing it because you had to be my MAO reader for a while, no? Then you will know this because this is like in January when I show this thing itself. Okay, so I don't expect a lot of people. Thank you so much, Chris, Chelsea, Ronnie, and Susan. Now, take a look. Everybody take a look. Now, when the indicator, okay, bridges above 85, you can see incredibly, all right, you can do take a ruler. Okay, you can take a ruler and do something like this. Okay, like this. Okay, you can take a ruler. You can do something like this. And you can see that, right, every time this indicator is at the high level, all right, the market will generally come off, okay? And of course, if this indicator now is at the low point, my God, wow, the market goes crazy. So the question is, we are not longer there. We are now again back to the same high level right here now. So traders, you decide, okay? You decide what you see from here itself. To me, is that right? I'm taking the step onto selling slowly, or if not, it's all right. If I buy cautiously. That is my view right now, because we have everything is all the stars, the planets are aligned very nicely itself, in my opinion. Okay. So of course, towards the end, this is a bull ratio. Now take a look. This is a bull ratio. When a bull ratio is at the high, we again see the same thing. Now it's not immediate. When the bull ratio is at a high, the market continue to go up a bit more. Okay, a bit more. So you will see not immediate, not immediate. All right, the market still move a bit more before coming up. So firstly, you look at this now. The market has already went up. Okay, so it's something like here. What's happening right here now? All right, so that means that the reason why I say 2 to 3 weeks, all right, before we might be seeing this. All right, I'll be very, very sure of that. So if anybody will tell me, Kel, can you give a more specific date? Well, today is the 22nd of November. So 2 to 3 weeks, make it simple, 3 weeks. 3 weeks from today is 21 days more. That means, all right, plus today, 22nd, plus 10, 21 is about December the 10th to the 14th. December 10 to 14, that period of time. Okay. All right. So that is something that we have to watch out for. Okay. If you're into other stuff like, the feng shui or the metaphysics, right, go and take a look at the time. So, right, it's also very interesting. All right. December 10 to 14 period of time. Okay. I hope so. It'll be a good Christmas. Well, in 2018, we saw something there itself. So later I'll show you through my charts. Okay. All right, so this is the thing that I'll show you now. We're going to come to the one of the final chart before we go to our usual TA view. All right, take a look, guys. This is all the technicals whereby they combine the main, all the usual oversold indicators. Then you can see that once again, the pinpoint level, when this all happened, when the indicator is at this point, you can see the market do have reaction. So again, we are at this level once again. All right, we're not an extreme high, but we're definitely near. And obviously, in terms of chart view itself, right, the market is much higher than the previous. Okay, so you think about this. Now, this is whereby I on us. Okay, now it makes a lot of sense when I saw Michigan decline to extend several federal emergency lending program. Right, it makes a lot of sense. Of course, what I say, if Trump is going out, what must he do? What should he do? Okay, so because of that, right, this is whereby, you're talking about that not enough lifeboats on board. I mean, it's like Titanic, right? The way he's saying this is very, very sad, all right, from a person like him. Back then, he was the one telling the whole world that don't worry, don't worry, don't worry. But of course, it didn't really bother now. So this is where it gets a little bit dangerous. Federal Master says that more fiscal policy is better than monetary support. Now, basically, he's saying that the virus case increase is very concerning. And the fact that we don't have a fiscal package is very concerning, okay? Right, now fiscal package, you know what's fiscal package? All right, fiscal package is something like this. Okay, it's a fiscal policy, which means that the government adjusts the spending levels and tax rate to monitor and influence a nation economy. So if Biden is to come in, honestly, if Biden come in, right, seriously, he will implement this. He will do more fiscal than doing monetary policy. Now, Trump is more monetary policy. So think about this. If Biden come in, right, is it really good or pretty bad? So now think about this. If you want to tax rich people, then what will you do as a rich people? Think about this, right? If we do a bit of a hindsight here, if everybody now looks back and say that, come on, man, Biden won this election by a landslide. If you agree with that, that is true. He did win. So if it's going to be a landslide, that means that, right, people know that he will win because people already wanted to vote for Biden. So that means in September, October, November, when we're all debating who will win, right, the boys has already know that Biden will win. But Biden's policy is that he will want to implement fiscal policy. Hence, therefore, it makes a lot of sense for them to sell while they can. You understand my point now? So if you look at back and whole thing and replay it on hindsight, it makes a lot of sense that they know that Biden will win, and therefore, right, they're right? But the question again, but why the market is at higher power? I told you before, the funds are coming in and Federal Reserve is involved, okay? So this is the company that I mentioned to you. Fannie Mae and Freddie Mae, all right, watchdog demands capital above 280 billion. Why is that so? Because now, as I told you, more and more people are actually getting home. But the thing is this, right, at the same time, all right, regulators are asking them to put more money. Because, right, if anything happen, right, this company will go down again. Now, this is not a company that I have in mind, but definitely, it's definitely, I thought, the same level here. If this company really get into trouble, right, it's quite a bad one. And you know, right, Warren Buffett had got out from this company already. So that's another thing that you must watch out for, okay? All right, so this is the chart that I want to show it to you. Remember the number I told you, right, 20440, right? Remember that? Okay, so how this chart being drawn is pretty simple. I think a lot of TA guys will draw this, nothing to be different. What we did was that we take this point, A, and B, okay, as the pivotal point. Then we took A to this, I connected A to A2, okay? That's what I done, right? Then I extend it further. Now, this is a weekly chart, by the way, weekly chart. Then I realized that the market, when extended, right, the market hit A3 perfectly. Now, that's the reason why the last 2 weeks I've been calling for sell at the high level, because I told you the drawing tells something interesting. So that's why anything above 29,500, that time I told is a sell, and the market really seemed to happen. Now on the weekly chart itself, right, you can see this is definitely an evening reversal hammer. All right, if you know in the weekly chart, this is weekly reversal hammer. The last time we see something like this, it was here. Okay, it was here, and it was somewhere like this in a way. Okay, all right, but of course this time the tail is long. Okay, and the thing is this. Now, if I take A, done with A, I took B and I link with B1. Okay, with B1. And when I extend, right, my God, look at it. The market hit B3 perfectly and rebound. Seriously, when I see this chart, it just irks me to the maximum, because we saw this chart, but we did not do much. We called for buy, but not so strong. Be honest with you, not so strong. And this is really one hell of a run we all missed. So the question is, if this thing, this megaphone effect really happened, if technical really can be a proven science, then the selling will bring it down to here. That means that, right, we'll look at a lower level that we have ever seen before, depending on the magnitude and how fast it comes down. If the market comes down in a split craziness, we may hit around here, 17,000, right there. If the market drags its feet, and really slowly, then it comes down, right? Then this figure can be even lower than 17,000. So that's why I say this. You look at this chart, right? 20,440 is still a reasonable figure as compared to this lower end here. You understand my point? All right. So now it's 29,000. We're talking about a 9,000 point here itself. Now, one contract on 9,000 point will yield you a lot of money. All right, a lot of money. So that's why I believe what Andrew is doing now is pretty correct in a way. All right, but again, who knows? We may be wrong, hopefully, and then the market goes up before coming up. I can't tell you guys. So 2 weeks to 3 weeks from now, we'll probably see this clearer. But again, this is just a forecast. Things may change. All right, so be careful on that. But I'm watching this very closely already. All right. So the thing is this, next week is going to be a very short week because of Thanksgiving. All right, next week will be a very short week. Now we have at 11 a.m. to 11 p.m. on this Tuesday. Monday, nothing much. On Tuesday, we have the consumer confidence. All right, the previous was 100.9, but now it's looking at 98. And recently, the numbers have been revised downwards, and all are hitting the lower band. So this one must be very careful. If consumers are losing confidence, this is not going to be healthy, okay? Then, of course, on Wednesday, there's a lot of stuff. The core durable goods, the GDP, the initial jobless claim, and the home sales, right? Now, the thing is this numbers, this data all looks towards the positive side. So the thing is this, I won't quote name because I don't have a source confirmed for that, but someone who knows seasonality pattern very well, he is calling for a buy from tomorrow onwards. So I will leave it for you to decide. Okay, I repeat, he's calling for a buy tomorrow onwards. Because on usual term, Thanksgiving, usually the market will recover a little bit. Right? It's more by joyous occasion. All right, so on Thursday, it's already Thanksgiving, but FOMC minutes will pop up. But of course, we expect the market to be the same thing. Then, of course, Thanksgiving again on Friday, early close. So that's a very short week for next week, all right? Crude oil inventories must watch. If the crude oil inventories are still at a very high supply, that means that the market is not buying into it. Okay, all right, so this is something to watch out for next week. Okay, so that is the fundamental part, right? And now we zoom into our technical part right now. Okay, moment, let me just bring up my chart. bring it in live now. So take a look, guys. This is how it looks like. Okay. So if the thing is that if you do a bit of drawing, market recover, da 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 da. Yeah. All right. So this is like a bit crazy. All right. Around where? About 16,000. Okay. Now, of course, is it really possible? I don't know. All right. But the Dow came down to about 18,000 in just how many weeks? 1, 2, 3, 4, 5, 6. In 6 weeks, the Dow came down within 6 weeks. So now this drawing is more than 6 weeks. So maybe 12 weeks to, or 18 weeks, but along the time. Okay, so you guys decide. Okay, decide. Okay, so let's look at the Dow Jones slowly one by one. Okay, the daily chart itself, right, not very nice, as I told you, right, it's coming off. The level that I'm telling you, right, is 29,151. This level cannot breach. So 29,151 cannot breach. Okay, let's just go back up again and let's check the numbers now on the weekend data. Okay, it's down by 47. Okay, 47. So it's very nearby to my number 151. Okay, very nearby. All right, so watch out for this. Now the MA30 is 28649. So I strongly believe that that will be the first support. So traders, if the market do come down, 28,650 tomorrow will be the level to watch. Okay, I believe there will be some support there. If the market slides it through, then the next support will be all the way to MA200, and that's 27,000 already. That's a very big drop from here. Watch out for that. Okay, now remember I did show you this chart, okay, to some of you. I did the simple COVID Pfizer thingy. So from this point here, the Pfizer vaccine came out. So the Dow shoot up to 30,000, right? Then after that, I take this high and this low, create a Fibo number. And barely it's right, the market went up to above here, all right, went up all the way, but interestingly missed the high by a fraction. Then interestingly, you can see that it started to go sideways, and I draw a trend line from this point here, and it works like a jam, all right. Then after that, it came down, but once it broke this trend line, the market collapsed. So it went all the way. Now we all know in Fibonacci, right, 61.8 is a very powerful number. 61.8 is a so powerful number. And of course, what happened? Wow, look at it. Incredibly, it's as if that technical is really a science. All right, look at it. The way it rebounds is perfect. It is perfect. Okay, let me make it bigger for you. Take a look, guys. Take a look. Look at the 61.8. The way it touched, recover, almost recover, almost recover. So now what number is this? This number is 29,223. I repeat, 29,223. Okay, so the thing is that if the market bridges this level itself, right, and doesn't stay support, then based on technical, it's pretty clear that we will see this happening. Based on Fibo numbers, the market will lose 61.8, and then the market will be going to this common base neckline, and this number itself is below 29,000. Okay, so that means that the Dow should be coming here after it loses this point here itself. So that figure itself, 28,900 will be the level, right? 28,900. Okay, so from where we are now, you're about 300 points away. That's good money to make if the market breaks that 61.8 Fibo. Okay, all right, that is the, how about the NASDAQ? Now the NASDAQ, you can see, right, it went up on Friday, but towards the last hour, it came off. Take a look. This is what happened. Towards the last hour, you can see the NASDAQ literally collapsed. Okay, take a look. Literally collapsed. This is not good, my friends. It was hovering. It was holding up all the way. But once to the last 45 minutes, right, the NASDAQ just gave way. All right, NASDAQ just gave way. Okay, so the thing is that if it's additional play, people getting our NASDAQ shares, then of course the Dow should go up, right? But the Dow also came off. The Dow also came off. So it's not a rotational play. It was a sell-off. It was a sell-off. So if that's the case itself, right, if you look at this chart here, you combine with my chart, this one, this is where the concerning factor is already. Now, this is the first time my chart closed below the triangle that I draw for you. And I told you guys that on 23rd of November, which is tomorrow, there will be big movement coming up. So you decide. Now, I repeat earlier, someone tells me that, right, this guy who do seasonality pattern, he's saying that tomorrow is a buying day. Okay, he says that tomorrow is a normal, conventional buying day. But from the chart view itself, right, I don't know. We will see tomorrow market how it reacts. But this is the first time my NASDAQ chart has a closing below the line. The last time it happened was here. And next day, the market went down first initially and rallied. So maybe the guy could be right. The NASDAQ may open lower and then shoot back up again. It is possible. But if the NASDAQ doesn't do that and come off, then the NASDAQ will come up easily to about 11,600 by tomorrow or this week. Okay, Chelsea, if the Dow come off, right, Nikkei and Hang Seng will follow. Yes, it will follow. Yeah, it will follow. Okay, S&P 500. Now take a look. S&P 500, you can see it's a very bad closing. It's an evening star reversal. So obviously MA 200, MA 30, 3497 will be tomorrow's number. 3497 is the wrong number. And of course, S&P has the same drawing like the Dow Jones. You look at it, the point A, point B, point C. Yeah, so the A1, A2 it's the same thing, right? The drawing is there. Of course, I did something to share with you. I say, right, January 20th next year, January 20th next year. All right, there should be a very big happening. I don't know what the magnitude is that, but then if I recollect back what I just say that 2-3 weeks later the market may have some reaction. And then it may stretch over a certain period of time. Remember that? I just draw that for you earlier here. Or I clear a picture already. So the S&P tells me, right, on this day, 20th January, right, there will be something pretty big will happen on that day. So that day, what day is that? What day is that? Inauguration, correct. Now, this line was drawn last week. You know, right? I never change. And this line is based on the triangle of the chart. So I put the line there because of the intersection. But the date itself, right, I was like, wow, 20th January, inauguration. Serious? Okay, I'm not going to go into that. I hope everything goes smoothly for all Americans, okay? I really think about that. Maybe the market will do a super recovery on that day. I won't know. Okay, you decide. Now, gold, well, gold is what is happening right now. The squeezing of it is incredible. Look at it. The MA 30 and the MA 200 is squeezing like hell. So which means that something will happen pretty soon. And my triangle, oh my goodness, look at it. The accuracy is incredible. Look at it. Look at the triangle. Look at the high. Each time the triangle hits the high, it comes down. And this triangle will be with me for about 3 weeks already. So that's why I tell my fellow students that, right, I tell them that, right, guys, don't panic now. The color is all red in color. There's nothing to buy right now for gold. All right, that's why we don't buy. If you imagine you bought gold last few days, you'll be caught by it. So even though, right, you are saying that, how come the gold is supposed to be going up, not going up? That's my point. The system tell you don't buy, you stay out. All right, rather than you complain that not making money, you should be thankful that the market doesn't kill you off. I think it's something that you must understand. Traders, you must always remember this. You cannot keep on thinking of making money. Sometimes don't lose money is a better deal because you reserve the ammunition for the next round when the things really start to go on. You understand my point? All right, this is very critical. And the thing is this, if you have been hearing me from the moment I start until now, I already tell you already, your firing power now should be adjusted to a certain area and to wait for that thing to happen. All right? So the common question is, Cal, if the Dow Jones come down, right, will gold go up? I repeated many times to you, no, the gold will come down. I repeat, if the Dow Jones really goes down, gold will come down at the same time. All right, I know that is against conventional, but that is proven already. All right, then you may say, why? Because they will liquidate everything. Yeah, they will liquidate everything. This word would face and everyone would sit on it. What's your problem? Sorry, yeah, domestic issue. Kids. All right, so what happened here? Crude oil. Now, this is where I am very skeptical already. Right, this is the last part of tonight's session. Okay. All right. All along, I've been saying this. If the crude oil prices goes up, the Dow will go up. Right? I said that. Huh? So look at the chart. The chart tells me that, right, the crude oil price is going up, but the Dow is coming off. The Dow is coming off. Look at it again. You see, the crude oil price is going up, but the Dow Jones price is coming off. It is not equivalent. It's not the same. So there's only one answer to this. Yes, the three-letter word. Something will happen soon. Start with W, end with R, and the start of the alphabet. Okay, now I cannot say who will do that. I cannot say that because I don't know. But when boys are accumulating crude oil and the stock market is coming off, think about it. If there is something going to happen soon geographically or politically, think about this. You will buy what first and what you sell later, right? Think about this for a moment. That is why I'm saying, right, the next 6 weeks, right, the market will be fantastic for traders. If you can capture this, you're going to make a good money for Christmas and many, many good months to come. But you get it wrong, you pay the price. Got my point? All right. Last but not least, I know that you guys have been asking me for this guy. Cal, what's your view on the cryptocurrency? Well, my indicator is still pretty okay. All right, now this is crypto. This is Ethereum is still trading at the moment. Now this is Bitcoin. Look at this. How parabolic is this? All right, how parabolic is this? Now, FYI, is still trading. Bitcoin is still trading. And today you can see that at my pivot 1 and pivot 2. And how accurate is this Bitcoin with our pivot? Oh my God. Remember, if you're a PSV student, right, you know what, right? If the market opens below pivot 2 and stay below OP, what should you do today? Sell or buy? Please key in right now. This is real stuff. It's ongoing. It's moving because Bitcoin is 24 hours. Okay? All right. It's a sell, right? Look at how crazy is this. Okay? Let me show you today's market. Look at it for today. This is today's market. Look at the point there. This is today's opening price for crypto. This is the pivot 2, 18674. And Bitcoin hit this point, stop there, and sell. Oh my God. Look how crazy is this. This is trade with the boys PSV system. Trading on a Sunday weekend and still work perfectly like a jam. That is the reason why I tell you guys, we have one of the best product in the world. If we can do it properly itself, right, you're going to be very rich, super rich yourself. So guys, this Bitcoin will be ready very soon. That's the reason why we are revising the price for January 2021. Right, the price for our system will revise next year. All right, so if you're students of now, you enjoy the benefits. People who want to come in next year, they have to pay a higher price. Okay, so this thing, Bitcoin, will be ready soon, very soon. Another 3-4 days, we shall be ready. All right, it shall be ready. So guys, watch out for that. Okay, good, right? Oh my God, I see this. I also don't know what to say. Okay, guys, I have completed my sharing for tonight. All right, before we go, I'd like to do a simple summary for this. I don't want you to get it wrong. All I'm saying is this. The system, sorry, the economic signals are definitely very bullish. So the market may continue to go higher a few more weeks, 2 to 3 weeks time. But as it goes 2 to 3 times, right, it's just like it's stretching the bubble to the maximum. This thing, once it's stretched too far, it will explode. So that's the reason why in January last year, we saw the same thing repeating, and then after that, the market just came off. Okay, so that's my point here itself. Okay, is gold a long-term bear due to no stimulus? Like I said earlier, B, all right. No stimulus is one, but the funds are now in emerging markets. So I repeat, once people get out from these emerging markets, they had to put the money to somewhere. So think about this, where will they put, right? So I'm suspecting what I just said earlier is that, right, there will be initial sell-off first. But after that, right, they'll target one place. They'll target one place to put all the money and speculate like nobody business. Now, before you go result, right, if you didn't see this, let me share this with you. Recently, Singapore stock market, the penny counters are going crazy, up by 20 to 40% in a single day itself. Now, we all know as traders, when Singapore shares penny counters are rocketing, people are buying and making money, US penny counters are going up by 20 to 30% per day, you know that that is the final wave already. It will go a bit more, a little bit more as usual, but that is the end. So whether or not you believe me, I let you decide, because I say it's all about a personal opinion. Now, for me, it's all right. Every morning, I'll do my MAO. I'll tell you the levels. Watch out for the market. You just decide what to do, okay, for yourself. End of the day is your money. You decide, okay? My job is to share. Okay, thank you very much for this evening. Thank you so much, right? Sorry to take your time, and I hope you do well, and I hope to see you again next week or next Sunday. Bye-bye. Thank you, guys. Thank you. Good night. Have a great day. Bye-bye.